Thanks for joining us for our Real Deals Tech Innovation Conference. I'm Simon Thompson. On this panel, we are taking a look at the future of due diligence, tech, and the dynamic of DD post-COVID. Joining us on the panel is Ian Oxley, Head of Origination and Partner at Silverfleet. Ian uses tech DD to source and assess investments. We've also got James Prebble, Director and Co-founder at Palladium Digital, a service provider focused on tech and digital due diligence. Also, you, our audience, if you have any questions for our guests, send through the questions and I'll put them through our guests as they come up, or worst case, we'll get to them at the end. So, gentlemen, thanks for joining us.
Pleasure to be here.
Thank you very much.
So diving right in, what are the key issues associated with due diligence in the post-COVID world? James, did you want to maybe start us off?
Sure. Look, I think, Simon, there's been a lot of chat already this morning about some of the complexities of undertaking due diligence over the last 12 months, where we've not had the access that we might typically have to management teams. Certainly from an advisor's perspective, it's been different, but also the investor's perspective has been changed as well. Not being able to look into the whites of the eyes of the management team, not getting the tours of the factories, or the in-person demonstrations of technology has definitely changed things. But for everything where we might have seen perhaps a negative, there's also been positives too. So taking that question specifically, what has changed? I think certainly the obvious things, the enormous amounts of video conferences that you might do with management teams is inevitable. But I think one of the important things, and we'll talk about this more today, I think, is not necessarily how the process has changed per se, because we've got the video conferencing and we've got our virtual data rooms and requests for analytics access, but actually the nature of the questions and the things that we're looking at has changed a little bit too. With 10 years of technology and digital adoption essentially happening in the last 10 months in some industries, the questions we're being asked, the things that we have to look at have changed. And so when you receive an investment memorandum now and it's littered with buzzwords about being data-driven or AI-powered or technology-enabled, you're asking yourself, well, is it, or is it trying to take advantage of recent spikes and growth in kind of technology adoption?
Interesting. Same question, Ian. What are the key issues associated with due diligence in the post-COVID world?
Thank you. Well, I echo what James said there. And I think in COVID, what's changed or accelerated as well is focus. The video conferencing is great for initial meetings. It's great being in a pan-European firm, able to meet companies in Sweden and Germany without having to travel for the first meeting. But it means your time needs to be more focused in terms of when you're doing due diligence, what is it for? What sectors are you interested in? What kind of technologies are you interested in? And what are you going to bring to the companies that you invest in? So therefore, that leads the due diligence program and means you have to have laser focused questions that you're trying to dig into. So that might be working with James on a particular aspect of digital due diligence, or it might be something around a particular technology that we believe is interesting and hits a macro growth trend that means that value can be created in the investment that you actually are going to make. And therefore, what are the questions in due diligence that tell you if this is going to be relevant to this business and tell you if that's something that can be built on?
Interesting. So could you both kind of give me a sort of quick line or two, or just a little bit of background to contextualize how you guys work with tech D&D, specifically in your day-to-day, so the audience kind of has a sense of where you're coming from in terms of your kind of sharing of your insights?
Sure.
James, you could go.
I mean, yeah, from our side, you know, it's pretty obvious as a digital and technology due diligence provider, as part of kind of our broader digital transformation services, that this is what we do day in, day out. We have done for the last 6 years. We look at businesses on behalf of our private equity clients and try to understand their digital competencies, their technology competencies, you know, trying to, I guess, sort the wheat from the chaff in some respects. You know, those that purport to be digitally led when the reality is perhaps they're not, and those that might have something fantastic in their technology that's really worth getting quite excited about and encouraging or supporting our investors to kind of get behind that. So yeah, that's our day to day. Our bread and butter is looking at very digital or technology oriented businesses, and it's an incredibly broad spectrum. It's everything from what you would expect, your typical kind of e-commerce, financial services, ed tech, all the way through to the slightly more kind of bleeding edge technology, innovative businesses around, you know, advancements in manufacturing, or, you know, emerging professional service businesses. So it's a real broad search of what we look at.
Same question, Ian, probably not as clear cut, but you kind of indicate precisely where you use tech to DD or in your role, basically.
Absolutely. And I echo, I think it was Susan on the first panel from ECI who said it's hard to think of an area in the investment process that's not being boosted and impacted by technology. And I think that applies absolutely to due diligence. So starting with the basics that have really grown over the last few years and continue to grow. There's a massive amount of data analysis supplied by us as a GP, and also very specific providers. So that might be, in the past, the people who we relied on for confirmatory financial due diligence, like PwC, now have crack teams to augment that of data analytics, so that you can look in much more detail at the history of a business and therefore predict better insights into the future. The second area is what I would call technology due diligence. So people like Intuitus, who've made the area common now, alongside Ops DD, of checking the basics of the technology in businesses, but also going beyond that and saying, what are the technology strategies in businesses? And this is absolutely common and critical in all parts of the due diligence now. And then you have even at the end of the chain, due diligence around legal. So in the data room is now boosted by AI tools to help you look further back and in more detail. So those are some of the basic areas that are
very comprehensive
in the day to day. But for me, as an originator, it is broader than that, which is, it's also about what is the technology in these businesses that we're going to be able to affect and create value with. So that is, the due diligence really starts when you're mapping sectors and deciding where you want to invest your time, and that's helping focus on which companies to look at and what are going to be the questions to be asking in due diligence.
Cool. So that kind of follows on to my next question, and I might put it back to you again, Ian. But what are some examples of new technologies that have the potential to be fitted into target companies or portfolio companies, and how do you assess early on a company's capacity to kind of, you know, have that tech implemented? So I guess first examples, and then we can kind of look at the assessment.
Yeah. Okay. Thank you. So new technologies, I think new technologies would be bracketed into some areas that you will know. So a growth area is clearly AI. So I'll give some examples of that. And then I would create a second class of examples around physical technology. So companies that might have specialist manufacturing or some kind of physical aspect to their technology. And a lot of what we're seeing there, I would classify as clean tech. So I'll maybe cover those two areas. So in AI, a couple of examples in our portfolio. We have an investment in a business called Care Fertility, which is the UK leader in fertility treatments. And there you have the use of AI to help select treatments and even embryos that would work best for the customer. So help using digital technology to help the embryologist to select how to do treatments. And obviously, this is of huge value and an important growth area in that sector. A second example would be Collectia, our investment in Denmark in debt collection. Again, under the theme of AI, the company is using AI to be best in class about how it makes its collections, and therefore creates return on investment and superior returns. So very clear use of a technology we've all heard of, but how do they actually do that, and how can we help? And then in physical technology, so coming into something like clean tech, which I think is an exploding growth, particularly post-COVID, really has been accelerated. We have investments like Cordux, which makes components used in very rapidly growing parts of technology in semiconductors, a technology called extreme ultraviolet. We have investments in light vehicle technology, so electric vehicles. We have an investment in a company that creates better ways to plate components for those lighter vehicles that now being manufactured with perhaps more aluminium rather than steel.
I mean, huge, just like so many, there's a lot of options, obviously. And obviously it seems like you guys, Silverfleet is pretty exposed, and you've like really rolled out these strategies. So basically same question for you, James. Basically, what are you seeing in terms of new technologies that have the opportunity to be fitted into companies, and for firms like Silverfleet to roll them out and put them in their portfolio companies?
Yeah, look, I mean, aside from the usual candidates, I could reel off a whole bunch of technology. We can talk about AI or robotic process automation. We can talk about pivots to cloud and all sorts of bits and pieces. But why don't we pick up on an example Ian used there? I think absolutely perfect to bring to light how the diligence process might have changed in the last kind of 10 months. Let's talk about debt collection as an example, right? So if you're a traditional debt collection business that knocks on doors to collect its debt, you haven't been able to do that for the last 10 months. Okay.
Right.
So in a diligence, you would have looked at business operations. How do I move people around? How effective is the collection? How many doors do they knock on a day? And how do I manage the rotas of those people and all of that sort of stuff? If you can't do that, then the diligence question changes. How has the business managed to adapt? How is it using technology now to recover its debts? What are we learning from the technology that's being deployed and the activity that's being undertaken? Does this change the business that we're looking at? Actually, are we a data intelligence business? Can we elicit better collection methodologies through the application of technology and using advancements like artificial intelligence or to help us understand what the best collection methodologies might be? That there is a perfect example of how the diligence process has changed. And another one might be a physical format retail, a garden centre that's absolutely exploded through the COVID kind of period in terms of its online presence and its online trading capability. So the questions are slightly different. It's not now what does the market look like, as a broad perspective, but actually what does the digital market look like? Is it here to stay? Am I seeing a spike, or is this a shift? And is this business well placed to be positioned to take advantage of that shift. So I think the questions have changed. I think the data that we look at has changed. And I think the systems that are being applied have changed too.
So probably a question from the audience for both of you. How often do you think about the combination or integration of technology and commercial DD so you can effectively connect a market position?
Sorry, the last bit, a market
position.
It's absolutely critical. It's a very good question. Because technology is so important in all the businesses that we invest in, it's fundamental to the market mapping process now. So maybe 10 years ago, these were seen as two different parts of due diligence. You would consider market mapping and commercial due diligence as one specific topic where you're looking at market shares and the scale of the business that you're invested in, and that's still important. And you were looking at technology as perhaps 10 years ago as red flag due diligence. So have they bought the right kind of licenses? Is the technology scalable? And that's still important. But what's changed now is technology is at the heart of what position companies are in their market. So it's at the heart of which companies do we want to go and invest in? Who's got the best in class technology, and how do you measure that? How do you benchmark that from the outside? Because we only get limited time. With the businesses are all busy growing, and so we have to be super focused on working out what we want to know when we get our chance to spend time with these management teams.
James, would you like to add to that at all?
Yeah, absolutely, I would. I mean, it's a great question. There's two parts. So to Ian's part there, the alignment between commercial and digital tech due diligence, I think in the last 10 months has never been closer. And I think with technology at the heart, a lot of the operation that we see, especially given kind of the need to deliver remote workforces and connect people remotely, that's accelerated it too. But I guess from our perspective, when we're looking at businesses, technology businesses, we're saying to ourselves, do they treat their platforms as a product? Is this something that evolves and continues to evolve? Do we see those behaviors? That's what we're looking for. And that's a complement to the work that's being done in the commercial space in terms of kind of the market appetite, the size of the opportunity, any kind of competitive dynamics. We're complementing that by saying, and how well positioned, how well placed is this business to continue to ride the wave in this market and evolve their product? And I guess the other side of that, which is very much the core of what we do, is the complement to commercials work in terms of market mapping, which is the layering of digital data points over the top. And that's come to the fore this year for sure. So tell me about the trends in the market. What are people actively seeking out across forums and social channels? What are people discussing and talking about? And that can be B2B, that can be B2C, but pulling that rich information. I mean, some of the tech we have access to means we can pull, I think top of my head, 8.4 billion lines of social conversation worldwide, aggregate that down to try and understand what people are talking about in certain sectors at certain times, and overlaying that onto commercial due diligence data points creates an insanely rich picture for investors.
Fascinating. So just on that data point aspect, so what are the key data points in assessing a company, to make an assessment on the viability of it for receiving tech and also viability on it? Just what are the key data points in the context of this subject? And then we've got a specific question who's audience member who's asked, what are the specific data points for clean tech as well?
Yeah, well, if I pick the first one, and then I'll let Ian pick up on perhaps the clean tech data points. So look, that's quite a broad question, because obviously it depends entirely on the asset that you're looking at from a data point perspective. Obviously, you want to make sure that the data that you're looking at is relevant for the asset. Certainly within, let's take a kind of a more consumer space, e-com, retail, FS, what you're going to be looking for is some of the key data points are your classic kind of any traffic growth, any brand growth, general social awareness. You're going to be looking at conversion data points. how well they manage the customer cohort and understanding the value of customers and the trade-off between net new and existing revenues. They're super important to look at, in this space. But if we're going to move then into the more technology-oriented businesses where they perhaps have a product or a platform, if you're in a process and part of the investment thesis, or the future growth plans say we're going to deliver this much evolution to the product or the platform in the next 24 months, the data point you're interested in is, well, how much have you managed to deliver previously? Do I believe that you can deliver at that cadence? Have you got the ability? Are the plans in place to bring in that competency or that resource profile to deliver that amount of change in this time frame? Or are we dependent on one individual? So you've got very different data points depending on the asset, but they're the typical ones that we're looking at.
Fascinating. So, same topic. Could we angle your response into the data points specifically on AI and clean tech from our audience member, and also, and as you see fit as well, but just wanted to reminder there as well.
Excellent question. So on AI, I think it's still really important to understand from the beginning what is already there, what is the business model of the company, how good are the management, and what AI and technology tools are being used today. How good is the data? How good is the data that is in the businesses, and can that data be used for unique purposes, and with what kind of tools? So some of that would be related to who in our network can we bring to actually help, and is that person going to get on with the management teams that are inside the business currently? And on clean tech data, there are all sorts of quantitative methodologies now for measuring clean tech, and it's only relevant if it's measurable, around things like emissions for climate change, and measuring around resource scarcity. So something like how much water is used in a process, and can we find something that reduces the amount of water, which is in itself a scarce resource, in use by liters? What can we actually do to improve that, or what does the technology do to help other companies to improve that metric?
Fascinating. So could you talk about some of the, obviously there's huge opportunity for tech opportunities to kind of introduce them as kind of value addition strategies. Could you speak to some of the technologies that have actually found their way into the deal process, and some of them that have been the most effective in the last year, I guess? Ian, maybe I'll start again with you and then we'll go back to James.
Sure. Well, we touched on them earlier, Simon, in terms of the basics are the use of data by us and by some of the consultants that help us to analyze how the company has been performing in its market. So what insight is there from history? So the further back we can look in history and the more detail we can get from history, the more data points, the more we can look at what might happen and what we might be able to do with the business. We've touched on as well technology due diligence. So here you have tools such as AI to check code, to check how the technology has been developed. It has not yet replaced the human interaction by us as deal teams and by very specific experts who help us. And in fact, in some areas, technology is growing in parallel, but you still have very important use of experts to help check what that technology is telling us from the due diligence program. And I would re-emphasize as well that with COVID, the importance of focus. So the importance of having the right questions and the right methodologies for looking at companies once we've picked what sectors we want to invest in. And that can only be done by working very specifically around which themes are we interested in, which macro themes are we interested in, and which micro themes. So which parts of AI are growing, or which parts of clean tech can we invest in where we can bring something to the equation?
Sure. So similar question, James, but slightly tweaked, obviously, because you have a bit of a broader view of the market. So there's been some massive rapid changes, as you said, in the last year, shifts and rollouts of these technologies. Are there any sort of areas that are maybe overlooked? When things are rolled in quickly, there tends to be some area where they're not, they haven't had as much time to be assessed or have best practices be implemented. Can you kind of talk to some of the areas where, that needs some work, or maybe there's some gaps? Maybe information sharing is a good example, but I'm sure there's a number of others.
Yeah, I think so. I think, look, firstly, I think one of the things to consider in the whole process is the targets or the assets themselves have had to adapt to. So I guess what's changed is as well, no longer can, like I said, I think at the start, no longer can we kind of sit down with them and they, just log in and let me give you this demo. Now, the data needs to flow across to us. So what's become, I guess, what's changed in the process in terms of technology was certainly the access to analytics. Our own remote access into their analytics and system backends has increased. We've always had it, but it's been even more prevalent. I think, I'm going to pick on some of the kind of the smaller technologies that perhaps I think have been really, really useful, but perhaps been overlooked in the process. I'll give you an example. We're on a process, business in Germany, kind of remote dial in, all the advisors on a call. Normally you would all be in a room together and you wouldn't have this opportunity. But what we actually had was an advisors WhatsApp group, so that we could start to get kind of a collective group opinion on what we thought and where a question might go. You don't have that ability when you're in the room. You have to kind of second guess the room. So there's certain new little technologies that are making its way into the process that's interesting. Being invited into a 4-hour-long management readout, but having the ability to then carve out breakout rooms, for example. So disappearing off with the CTO for an hour as someone goes into FDD. Fantastic. Being able to come back into the main presentation. These little things that have been around for ages, but just using them in the process has made it slicker. But think about the downside of this too. I think what we have lost in the process is concentration. It's too easy to have email open in the background. It's too easy to have another task ongoing. You can't see what's going on. So you do lose a little bit of that kind of committed dynamic that you might get from management, or perhaps even indeed other providers sometimes, when it's not their section or not their part. So you've kind of got a downside to that technology. But other than that, I mean, of course, there's the emergence of kind of new assessment tools. This year's been absolutely huge for a lot of brands moving product onto Amazon. So we've got new technologies that have been introduced into the process to understand Amazon competencies, sellout rates, buy box wins, etc., etc. So yeah, there's been a huge amount. So there's the process technology itself, actually kind of gathering of information, and then there's the actual assessment side as well. And there's been new technology introductions there too.
Fascinating. So similar question in downsides of, or just picking up on what James was talking about, obviously there's been some great things come through in the last year in terms of technology advancement and adoption, but what are some of the downsides of working with it? What's being lost, and what are you hoping to get back again when things hopefully return back to normal?
Yeah, well, I think people are missing the face-to-face meetings. So working over Zoom and remotely is absolutely great. So we will be able to combine that with the more human aspect of a face-to-face meeting once that's allowed more frequently again, and I think we're all looking forward to that. But I don't really see that there's been tons of other downsides. I think what we've seen is the way due diligence is done, and the use of technology around all the specific components of due diligence has been growing and grew faster during COVID, and will continue to grow faster. So I'm very excited about that, and very optimistic about the amount of new technology that's available to invest in, and the amount of new technology that's around to help us make those investments.
James, so just bouncing off that, to what extent do you think the technologies that we've rapidly adopted in the last year are going to stay with us, or to what extent are they just a substitute and things will go back to normal? You see, or is it going to be a hybrid? What's in the what does the future look like?
Look, I mean, I think if I could predict the future, I'd be a very rich man. But one thing I will say is that I think a lot of in a lot of the assets, a lot of the businesses that we've seen this year, if I'm really honest with you, a lot of it is catch-up kind of technology. It's stuff that should have been there anyway. Okay. So you've got a lot of younger. I think if you're a kind of a slightly younger business, you probably put that core infrastructure in place in the first instance. So seeing that a business is investing behind its CRM capability, or its kind of go-to-market strategy online, or its ability to kind of service customers through digital channels, isn't particularly new or innovative, right? Because that's what a lot of the kind of startup businesses of the last kind of 10 years have kind of absolutely anchored their business around, being able to deliver physical and digital interactions in a seamless way. They put customer at the heart of what they do. So what have I seen this year in terms of processes? Lots of catch up. Lots of businesses all of a sudden accelerating their digital roadmap. The CRM is now right at the forefront of what they're going to do. The remote customer service is what they're going to do. But there's operational technologies they've had to introduce too. Connecting a remote workforce, being able to deliver a contact center when you can't go into the contact center. These things aren't going to go anywhere. They've created, I mean, there's some businesses in the past where, look, we're not picking on a particular area, but let's say I'm down in Cornwall, for example, and I'm a very kind of online business. If I talk about hiring of digital talent, that's always been quite a complex process, actually attracting people down to remote locations. Well, we seem to have overcome that barrier this year, because people can work from anywhere with the right technologies, with the right infrastructure in place. So that, I don't think that part is going anywhere. And I think a lot of what's been introduced is like I say, catch up. But in terms of the new stuff, in terms of the really new stuff that we're seeing, absolutely, the implementation of kind of data intelligence, data analytics, AI, anything that can kind of advance decision making within a business, improve productivity. I think these things are still to come to the fore. I think they're still mostly in their infancy. I think the automation of processes is another one that is still coming to the fore. The biggest challenge with RPA is automating processes that were broken to start with. I think that's the problem there. It's got to be automating the right processes to drive the efficiency. But these are the things that we're seeing. And my last point on that, I think, is it's changing or bringing to the fore some elements of diligence. Data diligence, we get more and more requests for that. How's data used? How's it structured? How secure is it? How's it managed? And business interruption. How does a business cope when it can't operate because the systems are down, or because they can't get together in a single location? So out of these changes are coming into new focus areas of diligence too.
James, you asked about downsides, but and I said, sorry, I'm an optimist. But sure. Look, I think, look at this improvement that's been made. What we've all been able to achieve in a lockdown is amazing. So the fact that we have been able to still keep doing great deals and still all keep working together is amazing. And you're hearing about this and seeing this can-do attitude the vaccination program working in the UK so quickly, for example, of something that's happened quickly. So just imagine what we're going to be able to achieve. Hopefully, it's early to say, but when we go back to not having lockdown, the possibilities for what will stick, I think it's early to say really what's going to stick, but hopefully some of these improvements stick and create some really incredible opportunities.
Interesting. I mean, is there anything specific, like specific industries that you see as being ripe for this tech kind of due diligence, ripe for kind of further growth, or where there's going to be bright spots coming over the horizon? James, maybe that's one for you.
Yeah, I think in all of our broad sectors. So we love software and services. We love healthcare. We love specialist manufacturing, and all of these have got fantastic subsectors inside them that are ripe for more technology. So in healthcare, you have things like remote diagnostics, which have been boosted during COVID, and I think will absolutely stick and are absolutely going to be a great investment area. In specialist manufacturing, Simon, you have we've discussed clean tech, but also automation as a huge area for investment and new technological growth. And in software and services, we're seeing tons of areas now that are being accelerated, tons of interesting subsectors where the software and the services are being accelerated by the advancements in how those technologies work.
I think I would just add to that, Simon, probably just one other area, again, and I know all of those line up with what we're seeing in terms of growth, and it's often reflected in what you see in terms of the deal flow as well that's coming through, and it's a lot of assets in that space. But on top of that, I think another one that's really going through massive acceleration is education technology, the delivery of remote learning, remote support, not just to students, but support for educators as well. Then there's in-classroom technology that also works kind of outside of classroom, which I know a lot of parents we've all had to deal with over these last 10 months. There's a wave of change coming down there as well. And I think for the first time, starting to use the data that's coming from those platforms intelligently to improve learning processes and learning content. So yeah, that's another one for us that we're watching out for.
Interesting. So am I coming through? I think my sound's coming a bit off.
It's all right.
You're good.
Pardon me. So another question from the audience. Can you speak to the specific ways that tech D&D is used for the general deal process for a PE firm? So acquisitions, deal sourcing, assessing the scalability of technology platforms and such. James, it might be good to start with you on that one.
Yeah, sure. Look, it's used. It can be used right from the very start. So as I talked earlier about all those data points we've got, traffic growth, brand growth, searches for certain services, right at the start of deal origination, that technology, that insight can be applied to help look for breakout firms, breakout sectors, breakout services, things that are growing in terms of popularity, to be able to understand competitive dynamics or landscapes, the differentials in different kind of territories, geo-territories, the difference between France, Germany, and Spain, for example. So that can be there right there. There's a great little education point, a kind of a self-education point from that data right at the start of the process. And then we pivot, I guess, more into kind of the support process. And again, these data points that I've talked about there, they're really useful for outside-in analysis. So before you've got access, if you want to do a bit of pre-deal work, you can apply it to start to understand how a business is faring in a particular market dynamic, how they are doing in terms of their kind of influx of traffic and reputation, visibility. But the nitty-gritty, kind of the nuts and bolts stuff of getting into how advanced is their technology, how quickly is it evolving, what are the adoption rates, what are kind of the economics behind it, that requires the access part. So that's the evolution for me. It's kind of Origination can be used on the data side of things, pre-deal to get kind of a little sense of where they're at. And then when you're in that deal process, when you're really into kind of the exclusivity window, that's when you get the drains up and you're looking behind the platforms to understand kind of the scalability, the structure of the technology and the general operations that sit around it.
Fantastic. Similar question, Ian. Just could you kind of articulate for our audience questionnaire or audience member just precisely every kind of strategy or kind of useful aspect where tech is being used, assessing acquisitions, tech strategies, just in general?
Yeah, all the way through the investment process. So from starting with, for us, what are the macro trends that are important? So a macro trend might be the aging population, but what within that? So what's the data and what are the analytics that we can apply to which parts of the population are aging? What does that mean in terms of spending money? What does that mean in terms of different businesses that we're seeing? And then into
but how are you using tech to kind of assess those things? Like, well, what's involved? Is it a piece of tech, or is it just like is it a Google grab, or is it a variety? Like, what are some examples?
Yeah, Google grab, specific technology engines, data analysis, and AI around market mapping. So what does good look like? What are some of the things that we've liked in the past, and where do we see those in other markets? And what are the using those kind of engines, CRM systems, outside in analysis. We've worked with James, so James has done great analysis for us in let's say origination topics, and also later in the deal cycle. So which companies are getting what amount of Google traffic, and what are the actual trends in that? So who is on the up? What does good look like? So we work with outside consultants and experts as well on that. In terms of into acquisitions, which is a great question, what's out there where we can build scale? So you're using the same market mapping tools, the same CRM systems. You're using specific consultants who know those markets to help refine. Day one, if we buy this business, who else can we buy, and how can we get to that team with specific questions? So who have they been hiring? What are their reviews like online? What can we see about their technology innovation compared to others? So we use tools to help compare all of those points specifically, and we use consultants like James and others to help us get really detailed and granular on that.
Fantastic. So we're going to have to wrap it up relatively shortly, but before we do, James, do you maybe just want to paint a picture of what the future holds for this area and tech due diligence for your company, but also that what you feel like you're going to be doing for PE firms kind of going forward?
Sure. Look, I think I can sum it up pretty rapidly, right? Technology adoption accelerated massively. It's been thrust into the forefront of the diligence process. In my opinion, you need to understand the technology competencies of a business before you're investing. You need to understand the broader kind of operational capabilities. But rather than it being, looking for holes, it's got to be seen as a value add piece of work. It's got to be seen as something that sets us up for the investor up for the future. What you're doing is you're understanding today so that you can build for tomorrow. And the data allows you to do that, because you can look back, but you can also start to project what the future looks like. And that is what's so interesting about tech and digital due diligence, is that we have the reflection, but we also have the ability through the application of very clever pieces of tech to look forward to and start thinking about what our future looks like.
Gentlemen, really appreciate you joining us, and thank you to our audience for joining us for our Real Deals Tech Innovation Conference. I'm Simon Thompson. Until next time, thanks for joining us.